drama, obviously, going on in Greece, even as we watch our Joe Weisenthal there. And I want to get straight to your trade today because it has to do with what's going on in Europe and the FXE, which is an ETF that tracks the euro. We were talking about it in the break. This is an ETF that actually physically holds euros, which is interesting given what we usually see for ETFs.
Correct. So there's drama in the streets of Greece, as Joe's experiencing, but it's not actually happening in the euro. And we've seen that today, which is great news because that's helping calm the markets overseas as well as here, because we didn't see a big drop. And so, as you mentioned, the FXE actually holds euro. They're in a depository trust at JP Morgan. So this is one of the main ETFs that tracks it. So the way to trade this is to actually go out and buy calls. So it's at a 1 month low, but it's off the lows for the year. The euro is, and you can see actually it bottomed back when the quantitative easing started with the ECB. So now that there's not this Greek drama, you can go out and get exposure to the euro, and you can do it in a cheap way through options. So just go out and buy the 108 call. It costs about $2.50 depending where it's trading, and then you can have exposure out to August 21st. But the thesis behind this is that there's natural buyers for the euro, and one of them is the Swiss National Bank, and they're the bankers to the world. So they came in last week and really supported the euro and decided to tell the world, hey, we're coming out, we're buying it, we're helping support it. And the economic numbers, if you look in Europe, are doing great. Spain, their industrial production beat forecast. Same with Germany this morning.
Let me just ask about the ECB, though, because that would be the wild card here, right? If you see more stimulus put on by the ECB, in theory, that would put pressure on the euro. So what's your sort of downside protection here?
The downside is you can only lose the $2.50 or $2 that you put up to buy the call, and that's the nice part. If the dollar has a strong push and it does well, you're only out your $2, $2.50 just buying the call when you put it on. So that's the great part, and it's cheap. So the implied volatility is 13 for the euro, so you can get that exposure should the euro advance, and that's the big thing. If everybody wants the euro to advance, especially here in the U.S. Companies want that because they don't want a stronger dollar to impact their earnings.
And now we have about 30 seconds left. I just want to mention what has happened in the VIX. Last week, of course, we saw the biggest one-day increase in the VIX in about 2 years. Today, more muted gain of about 4%. Is volatility back now?
So a big headline, biggest day in 2 years, as we mentioned, but that shouldn't cause alarm because it's off such a low base. We were trading with a 12 and 13 handle, but we will stay in this range. We're below historic averages of 20, so having 17 here, 18, especially with the drama, it looks like we're okay.